investment. What is it that you've identified for trade?
Well, what are the three buzzwords? The first buzzword is crude, second is gold, and the third is power. Now, whereas everyone knows that if gold goes down, which are the companies which will lose, and if crude goes down, which are the oil marketing stocks which will benefit. But what about power? What are the implications of this CERC order? It is a near-term positive for Adani Power. It is a short-term positive for Tata Power. But it is structurally a great news for Power Finance Corporation. Power Finance Corporation indirectly has a large exposure to ultra mega projects. Whereas the world is talking about Tata Power and Adani Power, some of the smart fund managers currently are nibbling into Power Finance Corporation. Also, Power Finance Corporation has a very large dollar-denominated loan. So, given the fact that macros have improved, rupee is unlikely to remain under pressure, and for a company which is sitting on a large dollar-denominated loan will immensely benefit in an environment of rupee appreciation or in an environment of currency appreciation. Dividend yield, quite mouth-watering, not 5%, but certainly above 3%. Given the fact that market conditions are still very choppy and unpredictable, it is important not to really bet on the beta part of the market. It is important to bet on a company which also offers some degree of stability or some degree of dividend cushion. So in the near term, can the stock go to 220? The answer to that is yes. But to my mind, that is a great way of indirectly betting on what could happen to the power sector in the short term. Now let's look at the other big beneficiary. Now, everyone seems to be revisiting OMCs and stocks like ONGC and Oil India, but don't ignore Castrol. Castrol also is a direct beneficiary of crack in crude. Now, Castrol is a lubricant company. Either they import processed crude or they import lubes. Both of them will come down because of fall in crude prices. Castrol has a strong dividend payout, and also it has a very strong return ratio. So return on equity and return on capital for Castrol, they both are looking rather strong. Company has indicated they would be launching some low-end products next 6 to 8 months, which will help them regain some rural market share. The risk, however, here for Castrol are two. Number one, valuations are not all that supportive, and B, at a time when car sales and CV sales are under pressure, maybe the lube industry for FY14, which is the current financial year, could remain under pressure. But good comes with bad, bad comes with good. The good news for Castrol is that in the near term, there is scope for margin expansion. So Castrol and PFC, two stocks where I understand that fund managers are actively sniffing for some opportunities. With that, it's back to you guys.